What's going on, everybody? Today is January 3rd. Overnight, we got major political shock. Multiple outlets report that the United States carried out a large scale strike in Venezuela and captured President Nicolás Maduro and his wife. This is still developing fast, but here's what we know, and here's what it could mean for the oil and precious metals markets. Reuters and the AP described the explosions and disruptions in Caracas, and early statements from Venezuelan officials claim casualties, though numbers are still unclear. Reuters also notes uncertainty around who is in charge next, which is a big part of markets will price. Now, reading now on this report, is that the U.S. will take over the oil reserves, which, if you don't know, Venezuela holds the largest oil reserves in the world at 300 billion barrels. The U.S. is now running Venezuelan with the large U.S. oil companies moving in. The U.S. now controls the largest oil reserves in the world. That's 300 billion in reserves that they have. On oil, Reuters says PDVSA's key production and refining facilities appear to be operating normal with no reporting damage to major oil infrastructure in initial assessments. An important detail. However, the big risk for crude prices is the next step. Sabotage risk, port slowdowns, shipping insurance, and sanctions responses. Also, remember, Venezuela's exports were already under pressure. Reuters reports a U.S. blockade and seizures in December helped drive down exports down to about half of what Venezuela shipped in November. Bigger picture, Venezuela produces around 1.1 million barrels per day, about 1% of global output, but holds massive reserves, so longer term, if sanctions were lifted and investments returns, you could eventually see more supply, just not overnight. For precious metals, the initial playbook is usually safe haven demand. The last major Reuters snapshot heading into this was roughly gold around 43.13, silver around 71.77, with platinum and palladium also elevated after their huge 2025 run. Because this hit on a weekend, the cleanest read will come when futures reopen Sunday night and then at Monday's session open. If we do look historically, markets often spike on the shock and then do something counterintuitive. If the operation looks contained and supply disruption doesn't materialize, the war premium can fade. During the Iraq invasion in 2003, oil fell as hostiles began, and gold later gave back much of its war premium. And when Saddam Hussein was captured in 2003, crude and gold dropped initially as traders priced lower risk. So, what I'm watching for. Here's what I'm watching for in the next 24 to 48 hours. I'm looking for any signs of oil facility disruptions or port bottlenecks, sanctions, policy statements about Venezuela's oil sector, oil futures gap at the reopen, gold and silver response. Does it hold as a safe haven or fade as uncertainty clears? I'll update again after futures reopen and again after Monday's session. Give us a real price discovery. This is not financial advice, just a market read based on breaking news sources. So I hope you guys have a great weekend and stay safe out there, guys. Stay safe. And hopefully, this doesn't disrupt the markets too much. We do know that sometimes markets do move off of news like this, so be careful and make sure to subscribe to the Daily Stack Report.